Hello, Mr. Rhydderch, aka Realtor Dave. What I want to do today is talk about the financial concerns that I have when people only put 5% down. Now, before I have any of this discussion, I do want to say that I understand buying a home, it's not just financial consideration. Sometimes it's a good idea for people to just buy 5% down. They find a property they love, they want to live in for 10 years, they don't have to move anytime that next 10 years. Perfectly fine to buy with only 5% down. Buying a home is not just a financial consideration. However, I do want everyone to realize what they're getting into when they only buy with 5% down. A few important notes here. So let's just take a theoretical $300,000 home. So if you buy for $300,000, you have to put $15,000 down. So buy for $300,000, put $15,000 down. Now, that means your mortgage amount is going to be $285,000, but then you also have to consider that you have to buy mortgage loan insurance, which is going to be added on to your mortgage. And at 5% down on a $300,000 property, it's going to be $10,000. Now, if you also consider our other closing costs, lawyer fees you have to spend, property inspection, maybe a condo doc with you, this sort of thing. And I usually tell people to discount or to expect about $2,000. That means you've spent $17,000 to buy a house, and you only have $5,000 in equity when we roll the mortgage loan insurance into the mortgage amount. Now, that's one thing to be considering. But now the other thing to consider is what happens after a couple of years. Maybe you want to go and sell. And the biggest thing is that if the property has an increase in value, and in Calgary, we're talking here 2015, I think we have to consider the fact that it probably won't increase in value in the next couple of years. Let's say for 2 years you want to sell it, you can only sell for $300,000. Well, the big thing at this point in time is your closing costs. You have to pay for realtor fees now, and also lawyer fees, maybe a condo docs to buy them if you bought a condo. Probably end up being about $20,000. Now, after 2 years of paying down your mortgage, which was originally $295,000, that $285,000 plus the $10,000 of mortgage loan insurance, your mortgage is going to be at $278,000. So you want to sell at this point in time while considering your closing costs. Your total equity is going to be $2,000. And this, of course, is a terrible investment if you think of it this way. You spent $15,000 here 2 years ago, and now you're down to $2,000. And this is the concern I have when people put 5% down. Now, if you bought a property like this, and you lived in it for 10 years, this would be completely nullified. As long as you can buy for 5 to 10 years, after 5 years, you'll probably get your money back. After 10 years, you'll be okay, you'll be fine. And after 10 years, property values in Calgary will have gone up, and they'll probably go up after 5 years, but we can't guarantee that at this point in time. If, of course, you're in an environment like Toronto, Vancouver right now, where prices are going up every day, maybe buying only 5% down is a good idea. Because if, in this whole example here, if you end up selling for $350,000, you would have made a great investment, especially when it's tax-free, being your personal residence. Any questions, guys, just let me know. It's a very sort of important topic, especially in this day and age in Calgary, with relatively flat price increases. Thanks very much for watching, guys. Talk to you all soon. Bye.